Good morning or good day, wherever you are. This is our global webinar series, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is every day the same, quick and smart. So let's have a nice start like every day. And today it's Tuesday, 18th of December, 2018. Welcome to Admiral Markets. We will start like every day with our risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk which is not suitable for all investors due to their complex nature. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our regional web pages, for example, admiralmarkets.com, and you will find the long version there. If you are in the European Union and would like to read more about the retail clients, professional clients, offers and options, also that is to find on our regional web pages. Sometimes the picture shows more than 1,000 words. Here, 2 prominent examples, DAX 30, CFD, and euro dollar. The margin requirements could be quite different depending if you are a retail client or professional client. If you're a professional trader and you like to get the professional client status, if you meet the criteria, you can apply for it online. Here you see the specific link. Retail clients still have a big benefit. It's called unlimited protection against negative balances. Professional clients don't get it via regulation, but some brokers and of course also Admiral Markets offer something additional. We call it negative balance protection policy, and via that policy you get a protection up to 50,000 British pounds, what is round about 70,000 euro. Check it out with all details on admiralmarkets.com if you like to do so. This is me. My name is Jens. My English made in Germany. Admiral Markets is a big international Forex and CFD broker. We have over 18 country offices. So I'm the German guy, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. Like today, on Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. On Friday, it's DAX day. Our leading day traders live every business day, every trading day to the same time. This week, we will have webinars. From next week, we will have a small break, the Christmas and New Year break. And then from New Year 2019, we will start again. But yeah, this week we have, so in a couple of seconds, it's Paul's choose, but some information more. And we are happy if you trade Forex and CFDs, of course, at Admiral Markets. You will get many benefits only with us. For example, DAX 30 or also euro dollar, triple spread of just 0.8 points for DAX or euro dollar 0.6 pips only without additional commission. Check it out on admiralmarkets.com. You can also check out what we are doing globally. We have an office in Chile, we have an office in Australia, and of course, offices in the European Union, all to find on admiralmarkets.com. Now enough from my side, it's time for Paul. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. Lovely to speak to you. Thank you for the introduction. I hope you can all hear my voice. Hope you can all see my screens. Good morning. Here we are, Tuesday, 18th of December. We're here towards the end of the year. I have absolutely no idea where 2018 went. It seems to have just flown by, but here we are, sort of the last real kind of full trading week of the year. Lots for us to have a look at today. We've had a lot going on in the last week. As Jens said earlier, you know, there'll be a little break for sort of the week over Christmas and New Year period. So this is an opportunity for us to have a little look at some opportunities for today. Have a little look at you know, what might be coming up over the next couple of months. So you know, what have we got going on this week that's of interest? Well, you know, we had a few euro area pieces of news this morning. They kind of failed expectations. We might take a little bit of a look at that in terms of how they impacted the euro itself. And tomorrow we've got you know, UK CPI, all right, which, you know, based upon what's going on at the moment with regards to Brexit and the British economy, everything's sort of for the markets quite sensitive to UK news. So we'll be keeping an eye on that. Not surprisingly, the kind of big thing this week is the FOMC for the US tomorrow evening. I think it's pretty much already baked in that they're expecting an interest rate rise, but actually what is more interesting is what Mr. Powell will have to say going forward. You know, so you know, of course, now the rumors are that invariably there'll be no interest rate rises next year. That's what they're sort of talking about at this particular moment. That has a knock-on impact into you know, the sort of the US dollar and also the US indices, both of which we're going to have a little look at in a moment because they have that kind of knock-on impact itself. Then Thursday, we've got Bank of England and Bank of Japan rate decisions. I don't think the market's expecting anything out of the ordinary there. It'd be more about what, if any, kind of sentiment is relayed in the sort of governor's comments. And then on the US on Friday, we have the GDP, which of course Mr. Trump will be looking at to sort of give him something new to tweet about. So as I said, FOMC is tomorrow evening, and of course, as I said, I think markets are mostly baked in some, what they're expecting to happen tomorrow. But as I said, it's more about the sort of the sentiment in Mr. Powell's comments. And if we look here, okay, we've got the dollar index here. I said a couple of weeks ago, I thought we might have actually sort of been rolling over there, okay. And just as I appreciate, we have a broad range of experience in the room. My charts are very simple: green bullish candles, red bearish candles, a blue 20-period moving average, red 50-period moving average, and a green 200-period moving average. I'll draw in levels of support and resistance and any particular patterns or trend lines that I see of relevance. So as I said, that I thought we might have actually rolled over, but we've had a bit of a scrappy week, and what actually we had a sort of a bullish key reversal here. But although as I said, I like to see that at the end of a downtrend, not after a period of consolidation. But what you can see this morning is that we've kind of had a little bit of a thrust there to the upside, okay. To sort of we've had a thrust to sort of a new sort of what would be 2018 highs there, up towards what 97, 65, 67, 68, okay. But we have not been able to hold them. We've dropped down a little bit upon that, and that's what kind of is of relevance and interest to us. And so I'll be looking to see how that impacts to tomorrow. But what I'm really more interested in is how does that play out on some of the sort of the currencies that we're used to working and trading on. So let's have a little look at euro dollar and also the pound against the dollar, which I want to sort of talk about. So here we are on the euro dollar against on the weekly chart. What we have here is that, you've heard me talk about it, is that it's been a case of this 113 level, all right, as a level of support, has acted as very strong support along with the kind of dynamic support provided by the weekly 200-period moving average. We can see there, sort of last week we had a bearish engulfing candle there, okay, that we can see. But once again, a bearish engulfing candle is something I'd like to see at the end of an uptrend. My apologies. So if I saw it up here, well then of course I'd be interested in it after a long uptrend. But when we've been in a long downtrend and I see sort of a bearish engulfing candle, part of me thinks it's a little bit of a kind of a little bit of a last flush, all right. It's it's the last people to the party. And we can see that actually already on if we go down to the daily charts, we've had a little bit of a, once again, a kind of a bounce off that 113 level, all right. We've seen that. And if we go down to the 4-hour, we can see at the end of last week, it dipped its way beneath that 113 level, but it was, railroad tracks all the way back up from there, okay. It's clearly that kind of 113 level is strong support. And I wonder if Mr. Powell tomorrow afternoon sort of says, or tomorrow evening says that the sort of the likelihood of interest rate rises in 2019 have diminished. Well, that would be a bonus for perhaps the stock market, which we're going to look at in a moment, but also might take the sting out of the strong dollar. Okay, and if we're going to see a little bit of a weaker dollar coming into next year, well then that wouldn't be a surprise for us to see sort of stronger other currencies against the dollar. So I'd be keeping an eye on that. I thought we might have a bit of a breakout from a wedge, and it was actually, I would say, it was a little bit of a, as I said on the 4, a little bit of a false breakout, okay, a little bit of a push beneath 113, couldn't hold it, and actually we've had that nice bounce up. And what I'll be looking for on that euro dollar is, could we get above that kind of 50-period moving average, okay, on the daily chart? I'd be looking to see us get above that, hold above that around about 114. That would give me an indication that I'd want to be a buyer back up to that kind of resistance level around about the 115.30 level. So just keep an eye on that as that plays out sort of over the next, I'd say over the kind of next 48 hours as we get to some news in FOMC tomorrow and the reaction to that. Then we have to have a little look at sterling. Okay, so not surprisingly, we looked at a lot of it this week, last week, sorry, and of course there's been all sorts of shenanigans since I last spoke to you. Then Mrs. May, she survived her vote of no confidence from her own party, only then to sort of have no trouble or no joy when she met the leaders of the other countries at the EU summit, which may have sort of hardened her stance a little bit. And then last night, this morning in the UK, sort of Mr. Corbyn, the sort of head of the Labour Party, is talking about delivering a vote of no confidence in her for the way she has handled her vote, which she is now saying will be in sort of the middle part of January. But if you remember last week, let's have a look at the charts. We can see last week I talked about how when we were talking last week, we had broken to new lows for 2018. You can see yourself. You can see the chart there yourself. If I go down to the daily chart, we sort of moved our way down. We had a momentum reversal candle here. Last week, what I talked about was, I thought that if we pushed down beneath it, I would expect a little bit of a reaction. And what I wanted to see was, we were talking around about seeing how price reacted up around about that 126.60. How would we trade out through that? And I'll just show you how I traded that, because I appreciate that, that can be of useful and of interest to traders. Is that, as I said, we broke to sort of, new 2018 lows, okay, but we had a, a real big, strong, key reversal, okay, on 4-hour chart. We pulled our way back up to that sort of 126.60 area, which is what I was talking about last week. And then it was about last Thursday, what we saw was, I had a really nice inside bar here. Some people might call that a pin bar. I'd be calling it more of a little bit of a sort of a doji, a spinning top myself. But, what was clear was that the 50-period moving average was acting as a resistance. We had an inside bar there. And, as I said, I wanted to be a short backup in this particular zone. So, what I was looking to sort of to trade into it was, just normally I had a short in there around about 126.64. My stop was at 26.85, so I was only risking just 21 pips of trade risk, and then my target was down here just in front of 25.90. Just in front of this kind of longer term sort of support resistance level, and thankfully sort of on the Friday, it actually touched that and triggered that. So it was a nice little trade. It generated about 3.5 reward to risk. It actually went a little bit further, but, woulda, coulda, shoulda, okay. I had a nice simple trade plan, okay, and then, we were talking about it on the Tuesday, okay, it didn't actually get up to there on the Tuesday, and, sometimes we just have to wait a little bit for our plan to come to fruition. That's what happens. And so, we had a nice little run there. Now I think that what will happen is, we're starting to sort of, drift our way back north, okay, and we've had, I'd be looking at this as a bit of a sort of almost like scruffy inverse head and shoulders on the 4-hour chart, in which case, if we break that neckline around about 26.80, well, then, I could see us drifting our way up to sort of the 4-hour 200 at around about 28.10. So I'll be watching to see, can price get back up above that kind of area? Can it get up and hold? In which case, I'll be looking for price to drift its way north. So as I say, to around about that 4-hour 200 period moving average at around about 128.10. So there we go. We've had a little look through those. We also looked at gold. Okay, we looked at gold over the last couple of weeks. Those of you who've joined me every Tuesday, we've been talking about that 1235 zone. Okay, we broke through it kind of nicely. You remember we talked about it a couple of weeks ago. We broke through it. We closed above it. We had a nice inside bar breakout there, which gave us a little bit of a nice trade to the north. And then we drifted back to that area. Okay, we drifted back to the area, and we put in, a pin bar here, which is also a bit of a 3-bar reversal there. And this kind of sinks into our some of the commentary that we've talked about with regards to the dollar and euro. As I said, we broke out through on the 4-hour chart. We drifted back to that area, that around that 1235, and actually we put in a kind of a 3-bar reversal there, 2 seller bars followed by a bullish buyer's bar, which was also a nice key reversal bar there. Okay, it sort of came lunchtime Friday afternoon, and then to this week so far, we've seen that sort of gold strength. Okay, that gold strength drifting away there. Okay, to the north side. So this kind of links in a little bit to that commentary for FOMC tomorrow. Okay, if he implies that We've seen the end of interest rate rises, okay, in the US, and that that they're expecting none for the US for 2019 at this moment. Well, then, as I said, that will be used to sort of underpin the stock market, and a little bit that will take the sting out of the dollar, okay, the dollar strength, but that also might then sort of show us a little bit of gold strength as well, and I still think that. As I talked about, I still think that we can see price drifting up to that daily 200 period moving average there, around about that sort of 1250 mark. Okay, it's nice to see the way that the price has moved so far, and I would expect, so far to hope that what Mr. Powell has to say yesterday just gives that kind of the sort of the price its little bump to get it up to that particular level. So, as I said, it sort of kind of underpins, a little bit of comment on the US stock market, and I want to have a quick chat about that for the last few minutes in terms of, here we go, let's just try and find the S&P that's of interest to us today, because we saw some interesting price action in the American S&P market there yesterday. I've got so many charts here for you, ladies and gentlemen, just trying to bring it all up here. Okay, so bear with me one moment. We're just looking at it. We were just looking at it before, but didn't. There we go. S&P 500 daily. There we go. So, what we saw yesterday, ladies and gentlemen, was we saw this move here. Okay, we saw real very strong selling yesterday, and if we look at it on a bigger picture, okay, and this is the daily chart. What I'm interested in is, that's the lowest close since October 2017. Okay, so that's the lowest daily close for 14 months. All right, we can, yes, prices got down here before, but we can see it's never really closed. Okay, apart from that one day in sort of at the start of this year, it's never really closed. It bounced straight away. For it to come down and actually close there, okay, around about that 2550 level. Okay, around about 2550, which on the weekly chart is where I'll be looking at is a kind of an interesting area of support. We've got lots of fractals there around there. Okay, so it's what I'm going to be looking to see is, okay, will if we get I'll be interested to see if Mr. Powell sort of takes a very dovish tone to basically talk about future interest rate rises, in the hope that that will give the sort of stock markets a little bit of a bump north. So as an intraday trader, I'll be looking to sort of see, could price sort of rally back up to that 26.0 level or 2600 level, and if it does, looking at a little bit like that pound dollar traders, once price rallies up there, I'll be looking, if there's bearish price action, then I'd actually be looking for a sort of a shorter term swing short back down to that 25.50, and then I'd be looking to see, will it actually create a double bottom there, okay, which then would let us drift north. Or my own view is, if it breaks that 25.50 and closes beneath that on a weekly basis by the end of this week, yeah, that's kind of a very bearish signal to be ending 2018 on. All right, normally we've gotten used to a bit of a Santa's rally over the last few years, but there's not been much of a rally there. Okay, so we might see a little bit of a drift back up to that 26. But as I said, if it gets to close beneath that on a weekly basis, well, then we're going back, as I said, back to 2017, 14, 15 months for a weekly close beneath that 25.50. That to me is a very bearish signal as we come into 2019. And and if you just quickly look at it, we talked about this in September here. We'd reached new highs, we double topped, and I said that we'd have a bit of a sell off, and that's what we've seen. It's been a bit scrappy. Okay, there's been clearly a bit of fighting, but in the last 3 months we've seen a nice sort of move down there. So keep an eye over what Mr. Powell says and how that closes on a weekly basis at the end of the year. That's going to be fascinating. So let's have a little finish with the DAX. Okay, DAX, a very popular trading instrument for Admiral Markets clients. Let's just sort of bring us out here. Let's go out to the weekly chart. Once again, as I've said every week, the DAX has been sort of seen to be the weakest performing stock index in Europe this year. We can see there, we talked about it earlier on this year. Nice big head and shoulders pattern on the weekly chart, which has fallen through. I talked, the last few weeks here about, breaking that kind of 1080 level, brought us into this block, okay, in terms of supply and demand. I also saw, we've got a little bit of a demand block there, okay, and I'm just looking at that, we've sort of tipped our way into it. On the daily chart, okay, we got down to it and we've bounced up and fallen down again. But what I'm interested to look at is here on the 4-hourly chart, here's just another little trade from last week, the end of last week. Price rallied its way up, then I had a nice 4-hour bearish key reversal. If you want to know more about that, you can find out about it on the Mastering the 4Ms trading webinar every Monday at 4 o'clock London time. Here we actually, we're shorting here, okay, this towards the late end of last week. Okay, shorted that around about 10,936. My stop was 10,990. Hit my target of 10,720. Okay, it's a nice trade. But what I'm interested in now is from the market we've seen this morning, okay, is that, we've actually had a real big bullish key reversal there, okay. And what I'm actually interested in here is to sort of have a trade on here. If price sort of comes back here, sort of drips back before we fall away. What I'd be kind of interested in is sort of getting long around about that kind of 10,735 level, okay. So I'd want to see price fall back long about 10,735, stop loss down around about 10,685, okay. My target would be back up around about 10,937, which is, I'm risking around about 50 ticks for about sort of 200 ticks of profit, okay. That's a 4-hour trade. That's that's a nice trade. I'm happy to take that. And what I'd be interested to see is how price reacts if it comes back and then comes back up to that sort of 10,830 zone where we've got the 50 and the 20 and the resistance level. I'd like to see how it goes through it. If it breaks through it, I'll hold to my target. If if it sort of stutters there, then I'd probably step aside for around about 100 ticks profit, okay, for a 2-to-1 trade there. So just so I ran over there a little bit, just trying to get in as much as possible for the sort of end of the week. If there's any questions, Jens, I'll happily to take it if we've got a moment or two to carry on.
Time is our limit. I guess we are done for today. Tomorrow is another day. We have 5 days a week, 5 different traders. So if you like the series, tomorrow, same time, same place. And if you'd like to see and watch that again, in a couple of hours, it will be available on our YouTube channel. Just go to youtube.com/AdmiralMarketsFX. Thanks to Paul. Like said to the beginning, we will have this week webinars and then a small Christmas and New Year break. And then hope to see you all again in the new year 2019. All the time, good trades. Greetings from Berlin office. And the last word from Paul.
Yeah, thank you, Jens. Listen, it's been great to chat to you this year. I hope you have a fantastic holiday period. I look forward to sort of talking and working with you in 2019 for what I think will be a year of fireworks. Great trading, everyone. Goodbye.